Prayed. Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it.
Yo, good morning, everybody. Oh, shit. So yeah, we got a lot to discuss today. Oh, what the hell is that? Yeah, let me know in the chat if you could say everything okay, hear everything okay. Good morning, Fritz. Good morning, George. Yeah, let me know if you guys can hear everything okay. If everything looks okay. Sound and visuals good. Okay, perfect. How's your guys' weekend going? Good? George, how do you feel about what we talked about yesterday? Did you get a chance to dig into some back testing? And again, for anyone that's new, these calls, they're Sunday prep calls. I answer questions. I do, whatever a real mentor should do. Right? Okay, George said, yeah. Do you have any questions about anything we talked about? Did it spark any other questions? Or is it pretty clear? So how the power of 3 fits in the session. Focus on how the power 3 of 4 hour fits into the sessions and then macros. Is that something you've been looking into, Fritz? Because I can tell you, like I say, power 3 is on every time frame. The 4 hour, since you're looking at the 4 hour, I shared this the other day with my private group. God, yet again, I feel like I'm getting sick. Let's see, where'd it go? Somewhere here in the private group. Is it that one? Yeah, right there. There it is. So yeah, these are the open prices, time-wise, right? For the 4-hour power 3. So Fritz, if you're looking into the 4-hour, there's your open prices. So then you can kind of look into it. We talk about so much in my private group. It's insane. But yeah, any of you guys that are looking into power 3 on the 4-hour, you could look at it on the 1-hour, right? You could look at it on the 15-minute, preferably things above the 1-hour though for power 3. I did a study with my private group showing that even the 5-minute candles, if you go to like the 5-second chart, using the 5-minute candle as your main power 3, you can find a narrative inside that as well, relative to the smaller perspective. See, I'm very curious about what's going to happen with this tariff thing. Like, what's going to happen now? Do we have to pay back all that money? From what he was saying yesterday, though, that doesn't seem to be the case. If that was the case, you can imagine that would be very bad. I can't even imagine. Everything's going so well, At least it's headed in the right direction, to stabilize the U.S. Of course, some people don't like that, though. They want to see us fall, but pound sand. Let me set up the charts. Again, for anyone that's new, these are Sunday prep calls. We go over bias and narrative, how to determine that. Pretty much every week, we've been able to tell where price is going to go. So, I mean, that tells you something, right? So yeah, we'll discuss how to do that. Just got to pull up my charts real quick. Do you guys want me to look at the bonds and yields today? Or do you want me to just leave that for you to do? And we get straight to the DXY currencies and indices. Do you guys want me to get, the bonds and yields up and we break that down? Maybe just quickly. Okay. Because I know a lot of people on YouTube, they just want, like, give me NASDAQ or give me a trade, right? Like, I know that's probably not you guys, but yeah, it's very common, sadly. But that's why only 5% of people succeed, right? It's just the way it is. I have delayed bonds and yields, so it helps me. Okay. George said, thank you. The knowledge you shared yesterday, I help refine and update my trading plan. Perfect. Perfect. Would you say that your time with me one-on-one, if you had another mentor, would you say it's been as impactful as you thought it was going to be, or more or less? I don't think I've asked you that before. Like versus the initial expectation before you started working with me one-on-one. Oh, wait, also discuss the state of coupling currently between the bonds and indices. Okay. Yeah, it's been a bit chaotic with the relationship. Let me double check. So yeah, nothing's changed with gold. Whoops, too much going on here. Is that the 16-hour? No. So there's a 16-hour inversion here. Then we got this order block. That order block is also here. So the lower portion in here, next to this, we now have a run on stops, order block, order block, order block. You see how order flow is clearly telling you what it's doing? The wicks are being respected. 50% of the PD arrays are being respected, like the order block. The gaps getting traded through and then back into, and the price closes above them. There's no fair value gaps in here from the daily chart. It's intentionally doing that. It's balancing out the price range. And price seems to be running up into this up here for gold. Okay, let me see the chat. The way you explain it is much better than what I've learned elsewhere, and it really exceeded my expectations. I appreciate you saying that, George. Yeah, I try to get you guys as much value as possible, both here, but especially in my private group, because we have more time together. You know, it's more intimate. You guys are with me every day, so it's like doing this every single day with me. You know, and if those of you that do like the YouTube channel, you can imagine that it's a little bit more when you get to work every single day. You know, it's still enough just on YouTube. I have many students that are doing well on YouTube solely. But again, there's always that avenue for those that do want it. I do have a QR code here on the screen, or you could go in the link in the bio if you ever do decide that you want to work closer. But, give me 1 second. Oh, I don't know what's happening. My throat hurts. I don't want to cough in your guys' ears and blow your eardrums out. Might have to pause here and there. The yields in DXY have stayed more or less as they should. So yeah, gold and silver, they're part of the risk on, risk off analysis. We've been calling gold higher. We pointed this out. So we got the 50% of that wick. I wouldn't be surprised if it tries to get up there. We do have this up candle here. And again, if this was bearish, this should be respected. It should reject price pretty aggressively. We are trading inside of that. So one tip I can give you guys about when price is moving, say bullish, and your assumption is we're going to be bullish. Some of the key characteristics are how the wicks are being respected when they get traded into, if they get traded into, order blocks, and then every time price trades above one of these order blocks, you can, as long as price stays above the 50%, you can rest assured it's going to potentially keep going. And you could target anything that's recent, especially from the daily. You don't have to reach up here or reach up here to find a trade. All you need is the current candle, the previous candle, if we haven't broken through it, the high or the low, or any close proximity high or low. You could use those as your target and then trade towards those levels, given the fact that this is the higher time frame. Okay? So, and then every time price trades through a fair value gap, you should expect that it's now going to invert if you're bullish, because that's a characteristic of bullish order flow. Same with bearish too, right? You should break through levels, respect them, and keep going. But once that stops and you start to see bearish PD arrays getting violated and bullish PD arrays are starting to hold up in price, you can feel pretty confident that we're going to continue. And then each time, like say you took an entry down here, this is a very big tip that ICT has given over the years. If you're in a trade like this, say you executed here, maybe this was optimal trade entry, right? This low to that high. couple the 50% of optimal trade entry or 62% retracement level with a PD array. If you were to take a trade down here and price was to continue to blast through fair value gaps, pretty much every fair value gap you want to look at as an inversion. So if you study that and you get more comfortable with this perspective and you're in a trade, even on the lower time frame, right, just relative to that picture on that lower time frame, every time it blasts through a fair value gap, if your expectation is like something up here, you can, rationally believe that, okay, well, if that's inverted, that should be a strong support level. We shouldn't trade all the way through it again and come back to my entry. So if my entry was somewhere in here and have my stop below this low, you now have an order block here. You have this up wick in here. And then you have this fair value gap. So if it trades through the fair value gap and those other PD arrays, you can move your stop up to break even and be confident, right? Because price is proving that it wants to keep going until it doesn't, right? And when it doesn't hold these levels, it breaks down, inverts them, and then starts to go the other way. You'd have that same perspective. As price prints lower, every fair value gap that's broken through and basically inverted, every bearish fair value gap that holds up, right, comes up, taps it as resistance, and goes lower. And every order block, say this, right, every order block that gets traded through after a stop run, you could rest assured that it should be able to hold price. Very specific order blocks are important, like the ones that come after a stop raid. Every PD array is more significant after a stop raid, especially if you could see what the narrative is and what it's reaching for. And some of those levels that we like to see price reach for are labeled in the liquidity mapping list that I give you guys for free, right? And it's on my private group too, but it's how we map liquidity, like what's important. Aside from, okay, well, the current candle is important, and what's the closest close proximity candle on this daily chart and close proximity PD arrays. Aside from that, there's very particular highs and lows that I have mentioned. So if you're in the free group, you can go look at that. I post it every week. And those of you in my private group hopefully have a good idea of these things because you see it every day, right? So yeah, if this gets through this, we'll have seen a change in state. We'll see respect to this bullish order block, respect to this one, respect to this gap in here, and then bearish potential inversions are going to now turn to reclaimed fair value gaps to go higher. And I'm pretty sure that if we go down to this time frame, you could see this high to that low, stop raid, higher time frame bullish order block, change in state of delivery, inversion fair value gap, and we got a bullish breaker here. So again, our validation tactics have to do with 3 PD arrays being taken opposed to what your perspective is. So if this was to break down below 3 PD arrays relative to these higher time frames, from the daily chart, it'd have to get down below here. And it'd have to respect this, prove continuously that this is still a balanced price range, because that's what a large wick followed by a displacement is, right? It's a BPR. So trading into that is not like trading too deeply into it is not what we would want to see. You couple this wick with this order block here, and if it's bearish, it's going to stop in here. It shouldn't come up into this. It can go up there if they want, but I don't necessarily think that that'd be necessary. They're already at a premium. Basically optimal trade entry. So if it is bearish, it's going to have to give it up here. Otherwise, the assumption is that it's going to keep going higher, and we may end up seeing this high get targeted at some point. And once this high is taken here, well, you could technically use this, right? We have a stop raid, sell side taken, buy side taken. So with that being the case, we now have a new dealing range. Okay. So equilibrium is somewhere in there relative to this current range. So if you're looking at optimal trading tree, preferably we'd like to see it try to come down here, but we have an order block that's basically near that optimal trading tree level, right? So it may not want to go down into that. This is a time where optimal trading tree would not be really considered, right? Or we wouldn't put too much weight on price getting down into this level because we would prefer that it doesn't get down there. We want to see it respect this in a very sensitive capacity and then just continue to rally. Another thing that you can do here, take this, we have a high, low, higher high. It's that breaker. So you take it from this candle's high or this low to the high, you get a projection and it's perfectly showing us this up here. Okay. Where's it at? Where the hell is the markup? Okay. So yeah, we'll see if it wants to get up there, but that's long term. Before we get up there, even if this is what the narrative ends up being, we still have this high. We still have the quadrants in this wick. If it's bearish, like I said, it's going to have to give it up here. Otherwise, it's going to just keep going higher, invert this. Maybe it opens up, drops down into this order block, then goes. But unless we lose this low here, that's going to be my assumption. Okay? That's our line in the sand. That's multiple PD arrays being violated to the downside if that takes place. And then we could then look for the trend line liquidity and maybe even the equal lows here. But again, that's contingency plan. The main objective is to try to see if we can get this to go lower or see if this can go higher. Sorry about that. We got a projection here too. So we'll see. We shall see. We do have SMT. We have SMT at these lows and the larger lows. This low to that low. You could see the failure swing. Silver is the weaker of the two. So yeah, that's my assumption on gold and silver. So if we come over here to the yields, as you guys know, are significant because currency for any country chases yield because money goes where they can get the most on their investment. And if interest rates are really high, right, a lot of times money is going to flow into that currency. If it's low, the big players are looking to, make a return on their investment, So if this goes lower, it's going to drag the dollar lower because the dollar chases yield. Currencies overall for every country chase the yields, right? The return on invested capital, right, within their bonds. So at the moment, it looks like there's something in my eye, dude. So yeah, for now, start at the 3-month chart, see kind of where we're at for the quarter. Good morning, Tony. So yeah, we got this wick behavior. You see how price is just sideways? So if this is going to go lower, it's going to have to take out this low. It's been kind of nasty, very sideways. Again, I've mentioned this before, but I'll say it again. If the bonds and yields are indecisive or if they're consolidated, What does that do to your asset? Like if you're trading the indices specifically. Do you guys know what a sideways bonds and yields market does to the indices and the DXY? What generally can arise condition-wise? Let me know in the chat. Consolidated moves. Yeah, there's a lack of clean delivery. A lot of times it leads to a larger Kraken correlation. Another thing, if those markets are consolidated, like the indices, the currencies, so on and so forth, if they're consolidated, but we see the bonds and yields explosive, right? And they're just trending aggressively. Say everything's consolidated except the bonds and yields, and the bonds are going higher, the yields are going lower aggressively, while the others are consolidated. That gives you a pretty good indication of what they're going to end up doing. Because at some point, things snap into gear, right? They have to. It's just the way the market works. Everything's interconnected. And when it comes to these markets in particular, if everything's consolidated, say the indices, and the bonds are rallying aggressively, that's going to eventually lead to price breaking out to the buy side because it's going to follow what the bonds are doing. And then as a result, the DXY will end up declining if the yields are accelerating. But for the moment, the DXY is consolidated, right? So it's kind of like a prediction tool, right? It kind of tells you where the wind may blow with a pretty high level of accuracy. Of course, when there's a lot of things going on, the bonds and yields can kind of be stuck for a while. There's a lot of changes that have happened over the last year, 2 months? Almost 3. So it's also the end of the month, pretty much. It's the last week of the month of February. We have 6 days, and it's a short month. So you can notice what the yields did here. This candle attacked the previous quarter's high, right? And then now it's looking like it wants to maybe contest the low, right? Same thing happened over here too. Same thing happened here too. This is pretty convincing, right? Given the trend line liquidity down here. Where is my markup? Okay. So yeah, we're gonna have to see, right? And if it breaks down below this, we have a bearish order block. And the only way that we'd be able to see this go higher again in a trustworthy fashion from this higher time frame is if we were to break through the 50% of that, right? And then, we'd be able to see some of these lower time frames as well, kind of justifying that even further. But again, for now, right, if we take this high, it took buy side. This low, it took sell side. You take that range, break it down to 50%, and look at where price is at. This is another example of how important it is to know where you're at in terms of premium and discount and equilibrium from these higher time frames before you go to those lower time frames. Because look at what happens. How many times have I pointed out the fact that when prices at equilibrium or consolidating, the evidence of it truly being in a consolidation is us being in the 50%. How many times have we seen this happen? It's very, very common. And when price is not doing anything and it's stuck at equilibrium, you just have to understand that it may not break out of it soon, especially on something like the quarterly perspective. It may take another quarter. Remember, this is a quarter in the year. So it's a 3-month period. And there's 4 of those. There's a yearly candle in Power 3. So this candle, this portion of the year, this quarter, many times is part of the consolidation and consolidation maybe the start of the manipulation at times. And sometimes it does both. Sometimes it's only accumulation. And then the second and third quarter does the manipulation, and then starts the expansion, and then we go into the fourth quarter, and then it caps the yearly range with the fourth quarter. And you could see that pretty visually when you're on this quarterly perspective. As the years progress, you can go back in time and kind of see what happened. You know, you outline the whole quarter, or the whole quarter, and then you drop down to, say, a daily chart, and you get to break it down just like we do with the daily chart when we go to like the 1 hour chart to try to break down the daily range, right? So same thing can happen here. Same thing does happen here. Okay, so you don't want to discount that. So yeah, we're going to need a breakout of some kind for us to really be sure what it's trying to do. It could just bang around in here. It's also the end of the month. We're going into a new quarter next month, I believe. Go find... Go find the... where did it go? So if we go over here, so yeah, March 16th is going to be when things swap from one quarter to the next, the first to the second quarter. So yeah, remember, a week before, the week of, and the week after the quarterly adjustment, a lot of times you get a more chaotic environment. So we're going to be headed into that, I believe, the 16th. So yeah, we're like about 2.5 weeks away. So after next week, the expectation goes to, okay, well, we got to be cautious, right? Doesn't mean you got to be fearful. It just means you got to be cautious, okay? So, but yeah, in terms of where we're at, it looks like it's still rejecting this. We need to see, right? We're trapped between this and this. So if we take that information and we drop down, we have this low here. Prices were tracing up. We have a wick. This is an inefficient piece of price delivery in here. So maybe it looks to get up there. Maybe it doesn't. I can say that if the next candle or candles that open, right, they're going to trade inside of this range from this high to that low. It's Friday's high and low. You want to keep tabs on that. That's one of your very first liquidity pools. Because if this is going to end up down here, the first target it has to break through is this low. If it's going to get up here and dive or rally up further, it's going to have to break this high. Okay? I mean, that's just how it works. You know, when you look at the candles, each candle has to overtake the other one in some capacity, either the high or the low. So from that logic, you could see a more simplistic way of viewing important liquidity, because above old highs and old lows, even these highs and lows, there's liquidity there. And in order for this to move, it just makes sense that the current candle's range is important, and that liquidity that's left needs to be violated if it's going to go either up here, right, takes the high, or if it's going to go down here, it's going to have to take the low. So this principle is applied to every asset, okay? This way of viewing liquidity is very simplistic. And hopefully you guys see that, because it's really, really helpful. Same with the liquidity mapping list in general. But this is just another variation of how to spot important liquidity. So we got a breaker here too. We do have relative equal highs up here. So we have this down movement. Price can come up into that, but if price gets above this high, that's 3 PD arrays getting taken. The breaker, low, high, lower, low. We had this high to that low with a failure swing, rejection block, and then we also had displacement using this down movement, right, from this candle to the low down there as and the new week opening gap it was used as a mitigation block level, right? You can also see the low, high, lower low. It's also a breaker inside that mitigation block, right? And so order blocks bearish are also holding, fair value gaps are holding, wicks aren't being overtaken. So we need to see this really get above this. So it takes out the fair value gap, it takes out the order block, and it takes out the swing high, as well as the breaker, and then inverts this weekly inversion fair value gap as well. That would turn our attention bullish. Otherwise, you know, we may look to still try to reach towards this low down here. Okay, that's for the 10-year. Very similar thing on the 5-year, very similar thing here on the 30-year as well. And if that happens, again, this dictates or indicates where price is going to go on the dollar, and it does the inverse effect when it comes to the indices. That's the healthy environment. So if this does go lower, you can expect the dollar may end up being weak, right? It may continue to be amplified. You know, dollar's in a pretty interesting place right now. So we'll talk about that in a second. But yeah, that's pretty much all I have for the bonds and yields. Well, for the yields. And if these have an inverse nature to them, right, if they do opposites from one another, we should see this go to the buy side if this is going to go to the downside, okay? And it's just as simple as that. We got relative equal highs up here. Looks like that's what's going to happen. The only way that we'll be able to turn around and go bearish, at least the only time I'll turn around and go bearish, is if price ends up displacing and getting down below this. Because in that case, we could then reach for these relative equal lows in here, relative equal lows in here, and then we have this beautiful, very obvious equal low too. That's a pretty far ways away, right? So it may take a couple weeks, maybe a couple months, maybe even a whole quarter, right? But with the volatility, I wouldn't put it past them, in all honesty. Okay. So again, this looks like it wants to continue. So that's what we will get behind. This is a monthly fair value gap. Okay. So we'll keep tabs on that. All right, and we'll see what it wants to do. We have the low here. We have a midpoint of this higher time frame wick. And then we got fair value gaps over here, right here. So yeah, getting down below this level would be when we would look to go short. We're in a retracement. We intentionally left these equal highs. I just seriously think they went higher, lower. They've hit this inversion level here, right? We got back above this larger weekly fair value gap. So yeah, order flow is not really screaming to us that it wants to go lower. I'd say that getting down below this, from this perspective, that would make us pretty likely to go lower. Then we got the wick in here. It's an order block too, right there. So unless we start giving these things up, you know, I do see us potentially attacking these highs up here. Okay. And again, if this goes higher, that's very supportive of a bullish run in the indices. Okay. So again, hopefully that makes sense. If this was any other asset, I'd be thinking the same stuff. All the same things that I'm identifying, it's the same stuff we look at on the other charts. Okay, so moving to the DXY real quick. Let's start with one time frame for a minute. So if we go to the monthly chart, you can see that there's a monthly wick in here. We also have a bearish order block, well, more so here. This is inside of this one. So this one becomes more significant. quarterly fair value gap is where we started. We have this wick in here. Notice the closure below the 50% here, closure below this 50%, and it went down, took out the low here. We swept out a very significant low, so external range gets taken. The next thing it looks for is an internal range. So it makes sense that this is pulled back like this. We're inside this quarterly fair value gap, so we'll have to see how that wants to behave. We're just resting inside of it at the moment. Price has declined. We do have this low to that high, acting as a bearish breaker. Okay. And it's also, if I'm not mistaken, yeah, it's a bearish order block. And then not only do we have the monthly wick, but that's also shown here on the 2-week chart. It's also part of the weekly as well. So again, in order for us to really get behind price going to the buy side, we do have an early sign, right? With this high being taken, we got to see how that's going to behave, because this scenario could present us with something called a type 2 dealing range. Okay. And those of you in my private group know all about that, hopefully. We've talked about it a lot. But this is enough, right? It'd be a bullish breaker too, basically engaging this high to that low. We've basically triggered in the potential response to that. We have an inversion fair value gap here. The only time that we'll be able to trust sincerely that we're back in line with order flow and it's done giving this bullish run here is if we were to get down below this inversion here. Because you got a fair value gap in here, you got an order block, you got some lows in there. But more importantly, we have this inversion. And if it does that, it gets back down below this quarterly fair value gap. It proves respect and rejection from the monthly wick level, which is also, like I said, a bearish breaker. So this, in my opinion, would pretty solidly confirm that it's going lower. Okay, and if we go to this here, right, the next candle that opens up, it may present us with a bearish order block. Something I'm noticing here is this large wick. When you see this type of thing happening inside of an inversion fair value gap, this is something for your notes, by the way. Don't just Netflix binge watch. When you see a displacement like this, especially if there's a wick, many times price is not going to necessarily need to come down into this. Why? Can you guys tell me in the chat why that would be the case? Yeah, Slim, you got it. George got it. Yeah, it's a balanced price range. Fritz got it. Yeah, it's already balanced it. It can, right? Everything's possible. But we're in a game of probabilities, right? And the probability of a very deep retracement off the heels of something like this is pretty unlikely. Okay? It could be a shallow one, though, just to offer it one more time. Pull people in, especially because we took this high up here. So the expectation is going to be this to continue, right? And you can notice how the DXY, if that does take place, it's going against what this looks like it's going to do. These are supposed to be pretty correlated, pretty closely. Not exactly all the time, but very closely. If this is going higher, there's more of a chance for the dollar to go higher. If it's going lower, there's a more of a chance for DXY to go lower, right? Oh. So yeah, does that make sense? Why it's like foggy on my glasses. I don't understand. Slim said, yeah. Fritz said, yeah. Okay, cool. And again, you can already start to imagine, based on the things that we've talked about for years at this point, you can imagine that if the Kraken correlation takes place and it stays in place, we got to do what we've been doing recently, right? Kind of put it to the side, not put so much stock inside of it. So yeah, we're at a point where price is going to have to make a decision here. And if it does reach lower, tap into this, and then it displaces beyond this high once more, you can rest assured that this high is going to be targeted. There are also equal highs up there. Massive equal highs. Right? And then that would have a reverse effect for the currencies and the indices. Makes sense, right? Look at what the currencies have done. It starts to fall into place, right? When we do this type of analysis, that's why we do it. So yeah, if we get this to run up, we ideally want to see the yields fall in line. Because if that happens, right, if we got that correlation within that relationship, it means that we're in a really nice environment. Generally around this time is when that type of environment kicks in. Hopefully the experience from November to January and my seasonality assumption telling you guys that it's a lot of times going to be a little bit more chaotic, a little bit more difficult. Hopefully you guys got to witness that and see that because again, that's experience that you may have not known unless you discovered it or been studying ICT concepts for a while. But even understanding the concept, being able to see it visually, have someone show you what's going to potentially take place before it happens, and then you see it take place, and you're told why. That's something to think about. It's really good experience that you wouldn't get unless you had a lot of time spent on the charts looking at this stuff. But now we're inside of a time where generally things start to pick up, right? It starts to get back in line with like overall correlation. But we're going to have to obviously see what price is going to want to do and how this transpires throughout the rest of the month, right? Going into next month. So we'll keep these things in mind. But again, for the DXY, let me actually throw that back up. I got something in my eye. It's so annoying. Ugh. So yeah, like I said, this is a breaker. I think I like what I had on this chart more. What was that measuring out there? Oh, I think that's the quarterly fair value gap quadrants. We're above the 50% of that too. That's very nice. You could see that the market maker buy model that we called out unfolded spectacularly. All right, we did have to wait a little bit because all this nastiness down here. We tried to see if getting below the 50% here was going to turn into the completion of a market maker sell model off the heels of the breaker reaction and this displacement. So we can clearly see that order flow told us not today. It's not happening. We're going to do something else. So yeah. But with that being said, with where we're at, I think that, again, we have to watch this midpoint. It's funny that, oh, well, I thought it was a different markup here, this fib. But yeah, this is the 50%. So preferably we stay above that 50%. We definitely got to stay above this if we're going to continue to go higher. And I do believe going into this week, it's reasonable to assume that this is going to hold because it is a clear balanced price range. And we triggered in this breaker candle here too. All right. Actually pull this over here a little bit, get it out the way. We have a new week opening gap in here as well. So yeah, we'll see how that reacts. There's a lot of levels in here that should hold price. So that's what we're going to go into next week, believing about the dollar. All right, do you guys have any questions about the dollar and what's on the chart here? Does everything make sense as far as what we're trying to look for going into this week for DXY? If you look at this weekly chart, though, again, we do have this. We have change of state of delivery, and we got this wick being respected in here. So those are signs that the turning point may be in place. And then, of course, we got this up here, which, again, is a type 2 dealing range. We got high, low, high, failure swing that ends up getting above this high. When that happens, generally, this type of high here gets taken, right? The start of that, downside leg. If the type 2 dealing range gets kicked in by confirming the failure swing, I mean, it can also be looked at as a variation of a mitigation block as well. So the midpoint, regardless, since we got above this, shouldn't be traded to. But yeah, this is a very important thing to look at, right? To understand, to see, to spot, because it confirms that some type of low or a high, if it happens to the to the downside, has been put in place, especially if it comes off of something like this, right? This is a big wick. Price could not get into that midpoint on that monthly chart, right? Go to the monthly, right? Price, is it 50%? Let's just double check. Yeah, it's a little off. Okay. So yeah, that failure swing, we got inversions in here. All of this stuff is leading us to believe that there may be a likelihood for us to start going to the buy side now. And again, that's fully confirmed if price respects these levels in here and it gives a shallow retracement, even better, right? And then we could look for something like this, right? First and foremost, though, we have the upper portion of this. We have this order block. We have this wick. So price may magnetize up into that. Again, we have a new week opening gap here. We have one here. That's probably going to be less important. It's kind of far away, unless it breaks down, obviously. We got a new week opening gap here. We got one right here, which is where this high is. So you could see that the new week opening gap, how do I know this is a new week opening gap? Well, because I have an indicator that shows me Sunday, right? So then when I'm looking at these higher time frames, it consolidates my thinking. I go from where are the new week opening gaps, where's the weekly highs and lows, to, okay, I see there's a weekly high here, weekly low. Okay. In the new week opening gap, there's one here. At every gray area, there's a new week opening gap. So it just allows you to see, without having to go too deep on the lower time frame, the general proximity of where that's at, right? For each of the new week opening gaps. This makes it so you don't necessarily have to keep the markups on the chart, right? You could just, get good at identifying, these little gray areas, and you could see, okay, well, there's one in there. When price is close to a level that you spot like this, you obviously want to mark the new week opening gap, but you don't have to have 1,000 of them on your chart. It's good to have a template where it's only new week opening gaps, only new day opening gaps, because they do get used. And when price is like where price is at, if it's close to one of those or a couple of them, they're very significant because they act as yet another layer to support or resistance, like actual support and resistance. And then they also many times act as a target, as a magnet. Okay. So yeah. So that's basically my assumption on the DXY. We did the bonds yields DXY, so we'll carry that over into some of these other assets. We'll see what's in correlation, what's not, and then get a feel for what the overall environment is, right? Don't forget to like the video, by the way. Subscribe to the channel if you do get value and appreciate the content that I provide to you guys. It definitely helps me get in front of more people. And it shows that, I might as well keep coming out here because you guys appreciate it and you're using it. So yeah, if you could do that for me, I'd really appreciate it. Yeah, Tony, we've been literally able to navigate every single move this whole entire, year so far. Just like last year. We started out last year the same way, called the entire thing. We were right on point every single week. And, because things don't change and we're very organized and we know what we're talking about, we know what we're looking for, you guys see the result. And the result is not profitability, because you have to do that on your own. It's clarity, right? And then once you have clarity, you can go ahead and go try to do whatever it is that you're trying to achieve. But hopefully these calls help you get a little bit closer, right? Tony said, Chris, I swear to God, this is going to be the best year of my life. Hey, keep me updated on that, bro. That'd be pretty amazing. That'd be pretty amazing. Think about it. You're getting clarity and help from a channel that's smaller than all these YouTubers, all these so-called influencers and so-called mentors and whatever. And you're just here on YouTube. You're not even in the private group. So, that really tells you something about what it is that we do here. Many of you guys are doing phenomenally. And I'd love to stay updated. So, keep me updated, keep me in the loop. And we'll see how far you guys take it. And again, I'll be here every week, every Tuesday, unless something happens. That means education is real. Yeah, exactly. I mean, what we do, even if I didn't say anything about, what it is, just doing this and you guys watching what happens in the chart every single week that you guys show up, when you go and review from the previous week, it's all done pretty much what we said it was going to do, So it's very eye-opening. It really is. And one of my mentors, I have 3 mentors. They're all in the ICT world. The 2 outside of ICT, if you add their experience together, have 30 plus years experience. One has about 14 years. The other one has 11 years. And I'm going on 7, right? So it's been a long time coming, right? So they've done a lot of things, and they did it exactly the way that I'm doing it, right? All the things that I'm pointing out, they instructed me on what to look for, how to look for things, until I was able to go on my own. And that's how I know that what I'm doing here is helpful, because it's helped me. It helped me gain clarity, and then I was able to do the rest, just like they said, right? Just like ICT says. So I'm trying to obviously be that resource for you guys as well, and anyone that's willing to, really take this serious. You spend some time here and you see that this is not like anyone else. It's like a handful of, traders that are worth listening to, but even them, right? They don't do this type of stuff. They're not as accessible as I allow myself to be, because I truly want you guys to succeed. I've already done what I want to do with trading. I've already reached the level that I wanted to reach for when I first started, and of course there's levels that I'm trying to break through, of course, but I know how it was when I was first starting, and having that person there, not to like reassure, but to justify the confidence that I was having, right? Or the clarity that I was starting to have. I kind of just needed that assistance until I didn't, right? Thankfully I got away from the codependency fairly quickly, but it's because this stuff is so good. If you have a shitty mentor or someone that really doesn't know what they're talking about, and they don't prove that they can do what we do every week, at least at a minimum, call the market, you can imagine why a lot of people struggle. And they may have good flashy marketing that keeps you sucked in, but at the same time, it's like, are we there to be entertained, or are we here to learn? And if you're here to learn in this community, you're going to learn. You have no choice. I try to make it as simple and applicable as possible. And then I give you the why behind everything. So you're not just blindly following something that you saw, right? Or something that I talked about. You're following this stuff because you see it work in your hands, which is exactly what ICT set out to do, right? He set out to get all his students to be independent, and I think he's done a very good job of that, and of course I had help along the way. So it made it quicker. If I was solely with ICT, it would have taken me much longer because he does it on purpose. He makes it so you have to really go through all the videos to answer certain questions, right? And he did it because he doesn't like lazy people and whatnot. I don't like lazy people either. That's why I don't give signals, like explicitly. I do give signals, but I make you work for it. I make you find your model. I give you the bias and narrative. You do whatever it is that you're trying to do. It's not because of me. And your success isn't going to only be because of someone else either. Especially here, I make you take it into your own hands. I just act as guardrails, and I tell you what's ahead of you, kind of warn you guys about things, tell you how to get through certain things, and I share my process publicly, and it works. And it only takes like a month or two to really decide that, because it just happens in front of you. We all have the same chart. There's no foolery. There's no changing things midway. And if price does do something that I wasn't expecting, we use our flexibility protocol, and we get back in line. So if we're wrong, we're not wrong for long. Didn't that rhyme, huh? Let me see. Slim said, yeah, it's hard and lonely on your own. Yeah, it definitely is. Of course, it's possible, right? You don't need a mentor, but a mentor helps with any industry, right? If you don't have a mentor, you don't get that, futuristic wisdom that you'll get later on, more early. Like a lot of the stuff that I talk about and point you guys to, you wouldn't learn this unless you have a lot of experience. I have a little bit over half a decade of experience using the things that I talk about, So there's things that a trader that has a year of experience just hasn't been exposed to yet. And by default, if you get exposed to useful things that make sense and they're explained in a very simplistic way, and you can start to use these more advanced things a little bit sooner and understand them a little bit sooner, you can imagine that the learning curve kind of speeds up. Now, when it comes to profitability, that's something that only time can allow you to achieve, because you have to deal with yourself, and everyone has their own internal battles and struggles and whatnot. So, that's the wild card. So people ask, how long does it take? Well, I can get you to understand the technicals in a year, right? Maybe even less. You can really get locked in on what price is doing, understand the different components to bias and narrative and all these different things. But, the profitability element, that has to do with you personally, has to do with how you manage risk. Do you respect risk? Have you grown accustomed to respecting risk? So, there's a couple of things that a mentor can't just instill in you. I try my best to, when it comes to mindset and how to view risk and all these things. But, it's success is dependent on the person, and profitability is not just technical. It's also psychological and being impeccable when it comes to risk. Because if you make money, anyone can make money. But to keep that money long-term, that requires a skill set. It takes super long to build that, because it's self-control, discipline, the way that you view yourself. Can you follow the rules, right? Are you willing to not break the rules? How much study do you do? Do you have enough chart time to get pattern recognition, which is kind of what this does, right? These calls, I try to add to that for you from a lens of, someone that, proves that they know what's going on, and week after week, day after day in my private group, and week after week here, it's put on full display so you could trust it. Slim said, We're in the beginning to see this. I see that I can do this. If I just adjust and don't do stupid shit in between, that's what's holding me back. But I have also seen what I can do if I just wait for my setup. Yeah. Just remember, day trading is not everyday trading. I'm live with my private group every single day, literally every single day. I don't take one day off, except Saturdays, many times because I have some one-on-one students that I got to attend to on those days. But when they get to the point they're walking on their own, we'll be back to every single day. But every day outside of Saturday, I'm live, even on holidays. I don't take days off because there's no reason. I'm at a point where my mindset, I don't get over exaggerated with the losses or the wins. So that means I can be on the chart. I like to stay sharp. It's just like boxing or anything else. You want to make sure your craft stays sharp. Doesn't mean you can't take days off. You don't have to do what I'm doing and have been doing for years. You can shorten things a little bit. Maybe be looking at the chart 4 days a week. I do encourage you early on to study every day. You want to stay in tune with what's going on and build that pattern recognition. That's something that takes time. You could see a pattern, but to see it real time and like have that reticular activating system trigger, like the red car syndrome, right? Or the red car effect, where if, you have your car and someone tells you about their car, or if you buy a car, right, and it becomes meaningful to you that's now red, you notice that all of a sudden everyone has a red car, right? I'm sure you guys have bought a car and saw this on the road. Everything just starts to pop out, the red car, your car specifically. You see that it's not as rare as you maybe thought it was, but that's because you're now aware. Your awareness has been pulled towards that thing that becomes meaningful. And that's the same thing with all these concepts, with every PD array, all the different things that we do. Once you become familiar with things and you see some of this stuff and you understand that it's important, your mindset then gravitates to it, and then when it's in the chart, it pops out off the chart, right? And again, that's built over time, so, and I hope that these calls have kind of helped add to that experience, because it's very important. It's one of those things that is very much a requirement, right? The pattern recognition element. And that comes from back testing. That comes from like calls like this. It comes from you, journaling, right? So yeah. And again, all of you guys, since you guys are here with me all the time, from the time you started with me, or started looking at my content, or started with me in my private group, from that point up to now and forever, you should never have a trade that goes over, or a trading day that goes over 1 to 2 trades. Should never happen until you gain more experience and maybe adjust a little bit, maybe to add that third trade, which we have a protocol for, and every time you take a loss, cut your risk by half, period. Right? There's no ifs, ands, or buts, especially if you haven't reached profitability, or if you're in a space where, you took a trade, right? Well, okay, let's back up real quick. So again, part of the risk protocol, when you take a trade, right? If you lose a trade, you drop your risk by half. You do that no matter what. And again, if you're going to add a third trade, you have to cut your risk on the first 2, just so you can afford the risk for that third trade. And if you take a trade and lose both of the trades, you're done for the day, right? This is what I do. If I take a trade and I win and then I lose, I afford myself one more trade, but it has to be at half risk, okay? But if you take 2 trades that are losers, you get out. Don't even come back, because something's not right. Whatever you thought price was going to do may not be in price, and you don't want to get caught up. And there will be times where you'll see that those 2 trades that were losers may have been a little early or whatever, and then price still makes sense to you, and then you may want to try to go back in, right? If you get experience and you've already built this discipline with what I just described about your risk management, you can start to be a little bit more flexible. And depending on how aggressive you are mentally, as a trader and what you can handle in terms of risk management, that's going to be the deciding factor. But I always make it the extreme for all new traders, 1 to 2 trades a day. If you take a loss, you only have one more trade, and it has to be at half risk. If you take a win, the next trade, if you must take another trade, which I don't recommend, if you take a trade and hit your goal, whatever it is, right, in that one trade, even though you can get more, that doesn't mean you should try to get more. You know, the goal is not to get rich in a day. The goal is to get rich over time, you know, or to be successful over time, you know, and that comes from compounding. So, you know, you have 1% hypothetically as your risk every day, 1% maybe per week, 2% maybe per week, you know, 3 to 6% per month is actually fairly reasonable. It's very easy to achieve that. Anything beyond that, you need more experience for it to be sustainable. So, you know, just think about these things. If you're new, you want to be extreme with your risk management. You want to survive. Your goal is to survive and learn. Okay. It's not to get rich. It's not to pass all these funded accounts and whatnot. You know, and again, when it comes to funded accounts, you know, you want to look at those as a vehicle to add to a personal account. You don't want to make it your sole thing, because what if, look at what's happening to Top Step. You know, one more thing too about risk. The 1 to 2 trades a day, right? The whole way that I just described the risk management protocol, it is super effective in prop firms. You probably won't blow an account, right? It may take a lot of losses in a row to blow an account if you follow this. You know, like I haven't blown an account in years because I'm not aggressive. You know, so, you know, and the way that we look at price, we're generally correct with where it's going to go. You know, not every time, but most of the time. So knowing that that's a fact with what we do and the process I've taught you guys, let time fix whatever loss takes place and just follow the rules, because eventually you'll come out of that. And that's another thing that takes experience, right? Getting into drawdown, coming out of drawdown. Anyone that thinks like drawdown is a problem, well, in order for it not to be a problem, intentionally take yourself into drawdown and get out hundreds of times, like more than you may be comfortable with, because the only way you get good at that is by doing it. You know, how do people desensitize themselves? Well, they have a process that they trust over time, and then they've proven over time that even if they go into drawdown, eventually they'll come out of that drawdown on top. So it may take a little bit of time. You know, so don't be fearful of drawdown. Be appreciative if you take a loss, because first of all, you have a plan now that should allow you to not blow your account as long as you're not over trading and over leveraging. Okay. You know, and be patient with yourself. You know what I mean? There's no need to try to do some insanely crazy things. You know, just be patient. This stuff works clearly. And, you know, it's up to you to be impeccable with your risk management. Hopefully what I just described is a simple enough risk protocol. It's literally the one that I use. You know, my risk tolerance is a little bit different because of my experience now. I started with, you know, 1%, 0.5%. And now some days, you know, if I'm very confident, I can go up as high as 2.5%. You know, not in a funded account, right? I'm very conservative in those. But in my personal account, it's a different story. You know, I'm a lot more flexible, a little bit more aggressive at times. You know, generally I'm just conservative though, regardless. Because, you know, let time do the heavy lifting, not 1 or 2 trading days. Okay. So yeah. Let me see if there's any questions. Oh, yeah. So if you guys have any questions about anything I just described or talked about and laid out for you, just let me know. But otherwise, hopefully the DXY and everything we talked about so far makes sense. Again, this is what my assumption is. I don't want to see this wick get taken out. I don't want to see this fair value gap get taken out. Preferably we stay above the 50% of this. Okay. Let me actually pull that over here. So yeah. And again, we're inside of a breaker here. That's this one. That's what this red box is. I just don't have it on the upper time frame because it's just too much. It's too much stuff going on. Okay. So yeah, hopefully all this stuff makes sense. Okay. We're gonna look for this to go higher. We'll open up. We have Friday's high, Friday's low. I wouldn't be surprised, honestly. We have relative equal lows here. Would not be a surprise if they open up, target this as counterparty liquidity. Maybe they come and tap into this little gap in here one more time. But I want to see immediate feedback. I don't want to see us hang around, because if we hang around down in here, if you take it from this high down to that low, equilibrium's down there. So if it just retraces down into that and then kind of hangs around, we may be back inside this stupid equilibrium holding type of behavior, and we prefer that it doesn't do that, right? We're able to trade those environments, but I'd rather not. I'd rather see price open up finally. It's kind of at a hard time, but again, we're in the time of year that should change, so we'll see. Okay, so again, hopefully this stuff makes sense. So if that happens, if dollar does hold and go higher, we can clearly see that we have this high, that low, we have a failure swing, and now price is traded through that. We also have this suspension block here for the currencies, well, for the pound specifically. So we'll see, right? We're at the low of the suspension block. We have this large wick. We have displacement. That should be a balanced price range. I'd prefer to see us not even attempt to get beyond that. It could try one more time. We have relative equal highs here that haven't been taken. It's very similar to the dollar. Relative equal lows. Relative equal highs, failure swing. So yeah, if price opens up, I wouldn't necessarily be too surprised if they do the reverse to the dollar, where the dollar goes lower a little bit before it goes higher. I think this should go higher a little bit, potentially, and then use that liquidity as counterparty to smart money sell side positions, aiming for the monthly low here from January. Okay, so this will be my main potential objective. Sub targets, right? Or sub higher, like sub this largest time frame target being the monthly low. We have the failure swing in here. So low failure swing. So if price does respect this level, like I mentioned, say we run up and take this and then immediately start to run lower, this will be looked at as a low resistance liquidity run. We also have one down here too. Notice they're failure swings. So when there's a failure swing and price is trading into those, generally that's a low resistance signature. Now, if it takes the stops first, right, like a breaker, like this in here, that could be potentially a high resistance delivery. Okay, so another thing too, if this does turn bearish, buy side positions, they could be by default, because it's going against the trend, they could be looked at as high resistance. Okay. So yeah, hopefully that makes sense and simple enough. High resistance, low resistance, high probability, low probability. It's very mystical in this the community, as the ICT community as a whole. But it's really not overly complex, honestly. You could make it as simple as, okay, well, if there's a failure swing like this and we're bearish, anything that's trading against that we could look at it as high resistance. Anything that goes with the trend, for the most part, we could look at it as low resistance, and high probability, depending on where price is at. Like if it trades into a PD array and then we have that as our target, if it's going to get down there and we see like displacement, maybe a change in state of delivery, a lot of times it's pretty high probability, especially if intermarket relationships agree. And it's like Tuesday, Wednesday, or Thursday, right? say, the bearish power 3 on the weekly chart already started to unfold, things become a lot more high probability, especially if there's a news event and price is pretty close to a level like this, and all those things that I just mentioned are in play. And of course, in a macro, right? Those little time windows, coupled with the higher time frame delivery, and the day of week, right, and the failure swing type of delivery. I mean, it becomes very, very nice, right? It's like a hot knife through butter many times. So I've talked about high probability, low probability. I gave you guys a list the other day. Well, numerous times last year. We could talk about it again at some point. But again, with DXY potentially going higher, I want to see this take place. Okay, so I wouldn't be surprised going into this week. We have Friday's high, Friday's low. I wouldn't be surprised because we open up inside this range. I wouldn't be surprised if it reaches into this. Preferably, it doesn't touch any of this upper level, right? Like this in here. Preferably, we stay below the lower quarter of this. Ironically, that's pretty equal to the 50% of this down wick in here. So I want to see that happen. If that continues, we're on side, and I'm going to continue to look for shorts, trying to target this monthly low down here, and then maybe even beyond, right? Maybe it comes down to this, but we'll have to see, right? Before it does that, we got Friday's low that needs to be taken out. I want to use Friday's high potentially as counterparty liquidity for this time frame. So I'd like to see it run up above that, maybe. If it opens up, fails to even attempt to get up here, and then we break down below this candle here, I mean, we are in a very, very bearish environment, especially if that happens with DXY going higher. Maybe we get SMT here as well, right? Maybe it presents us with a failure swing. Do we already have SMT? No. But we do have relative equal highs here on both. So if one fails, right, and say it doesn't get even to the 50% here, or it hits that and then displaces, changing state of delivery again below this order block, while this one gives a trade through this and then declines, that'll reinforce with SMT as well that all these things that we've talked about for bearishness on this asset is going to come true, and it's high probability. All right. So yeah, does that make sense? Just give me a 1 in the chat. No worries, Slim. I'll talk to you later, brother. Yeah, let me know if you need anything. Okay, George said, yeah, okay. Perfect. So yeah, that's my opinion on this asset. So if we move along, come over here to the indices. My freaking stomach is growling at me. Let's take a look in here. Let me actually take some of this off. This is something new I've been doing. I don't ever trade the Dow, so I could really care less, right? I do use it, obviously, for correlation, but I also have the DXY now plotted down here. The macro identifier and the session identifier down there too. So that's what these are. But I put DXY here recently because it makes it so we could see what DXY is doing at any moment. And like if we go to, any time frame, we could instantly see what DXY is doing. So we don't have to go, okay, well, we got to go all the way back, right? We just have all three indices and the DXY in one place. So it just kind of speeds the workflow up a little bit, reduces friction, which I love doing. I like optimizing like that. It's why I have the indicators that I have. It optimizes so we don't have to think, where's a new week opening gap, right? Appreciate the subscription, by the way. Glad you're getting value. But yeah, anytime you think about indicators, well, at least here, anytime we think about indicators, they're just simply to help us out, right? And determine, where certain key reference points are at, so then we can consolidate our thinking, so we can focus on what we truly should be focused on, which is, is there a decision to be made at the moment or not? So these indicators are very helpful. So yeah, if we look at the indices as a whole here, we start at the quarterly perspective. We do have the NASDAQ beginning the decline. Look at what happened last year, right, for the first quarter. We've got second quarter, third quarter, fourth quarter, capping the yearly candle. Now we got another candle here. Where it's opened up, it's doing the same stuff it did last time, right? A little bit less exaggerated, but nonetheless, doesn't that look familiar, right? Last January, this January, the last first quarter, first quarter, right? It's consolidation manipulation. It's the beginning of the year, just like the start of the week, start of the month for Power 3. It's the same stuff that's taking place here on this quarterly perspective. So we do have a failure swing down here. So do I have that outlined? Yeah, I got it outlined. So we have a gap in here as well. We have a fractal high. We do see that the other two are a little bit more, willing to go higher. I honestly would not be too surprised if they do look to try to get down here, target this. We are basically presenting us with a bearish indecision candle, a little bit more heavy versus buy side, but we do see that this wick in here is being respected. We also see that this wick is being respected. We've closed above the 50% here. This one has rejected this high. If you guys remember, I talked about this yearly wick from the start of the year. We've been using these levels. I think I still have them. We don't necessarily need them unless we get back up there. But yeah, we used this the whole time. Price was being navigated through this wick. We targeted all the quadrants multiple times. If you go back at with some of the videos we've done, so it'll still be significant if price trades back into it. But for now, I like this relative equal lows, this failure swing, coupled with this fair value gap. Also, off the heels of the last year's first quarter, it looks like we're doing something very similar. So when the next quarter forms, if this is how we close, right, say February going into March, on March 16th ends up continuing to hold this delivery, say it's just sideways continuously up to that point, the next candle for the next quarter, we'd have levels like this wick, right? This larger wick would be the one we would use. So we'd use those quadrants. And then we'd also do the same thing. Keep eyes on this. Keep eyes on these wicks up here. And if price decided to run up there, you have for initial targets that can be used as a framework from this upper time frame for a quarter-to-quarter basis. We use all the same stuff that we use on those lower time frames, even on a quarterly perspective. Okay? So yeah, mastering this on these higher time frames, quarterly, monthly, weekly, daily, even yearly in many cases, can afford you, specifically the quarterly perspective, it can afford you a bias, a narrative for months. And then anything that's trading inside of that in the lower time frames, it's just a supporting time frame for what's happening here. Okay? It takes time to get comfortable with this, because it takes so long. But that's why, when things are fractal in that lower time frame and how everything is the same no matter what time frame you're on, meaning like everything's used in a similar way, you could then see how this is, possible to master as well. And over time, when you study this, you'll see that for months you're correct on bias and narrative. Some of you guys may wonder, especially if you're new, how are we able to stay in line with where price is going to go for such a long amount of time. It's because I spend more time on the higher time frames than I do on the lower time frames. Because I know that if I can nail down where it's going from the quarterly, monthly, weekly to the daily chart, anything on the lower time frame becomes a whole lot easier to navigate and trust, because I know what's happening on the bigger picture. So if I have like a bullish trend or a bullish retracement in a bearish trend on the quarterly, monthly, weekly, daily chart, if I have it go against that on the lower time frame, like 1 hour, especially the seconds charts, I have to make sure that, I'm conscious of what that could be. It could be a retracement to continue, right? Like if it's bearish on the higher time frame and the lower time frame is rallying, it's just simply pricing in a short-term premium to then continue to go lower, because that's what it shows on these upper time frames. So you can hold on to your narrative much longer. And honestly, you guys see the result. We're correct for weeks, months, days on end. And when we're incorrect, a lot of times, if the higher time frame hasn't changed, we just have a short-term adjustment until it gets back in line with the initial objective. And we have validation and all that I've talked about. So everything layers on top of one another. Okay. But again, from this time frame, if we get back to the analysis for currently, price has these relative equal lows. It's a failure swing. It is respecting this, but it's also respecting this. So it's technically sideways, right? It's technically being held somewhat. It does look like it's beginning an attempt to try to target sell side. Do you notice how balanced this is? There's no gaps to really go off of on either of the indices. So it's very balanced. We do have SMT here, okay, which we talked about early on. Right? We've navigated this market with everything that it's done since the beginning of the year. And students like Tony, and many of you that have been with me for such a long time, this is just like review. It's typical. It's what happens. We called this, and then it's, the whole entire all the price action that we've looked at, we've been able to get behind in one way or another. I don't think we've been wrong one time this year in itself, which is a testament in itself. But again, we do have this failure swing in here. This SMT was the trigger. Price ran up, right? I think it was here. Was it here? No, it was this one. This ran up. We got a rejection block, 50% of the wick. There was SMT at the highs. We ended up having price breakdown, creating a bearish breaker, which you could see here. We saw a double change in state of delivery here. We called out the new day opening gap that was up here, or the regular trading hours gap above these highs. Before it got up there, we were talking about that since October of last year. We've had this on our chart. And then we had this new day opening gap. All throughout this price delivery, we basically have navigated it up to that and then all the way down into here. So again, similar to the dollar, okay? Let me make these a little bit softer. So again, we do have the failure swing down there. It may look to target that. It may do that. We'll see. Do we have SMT at the lows here? No. Do we? I guess we do, huh? With this low. Right there. So that's a bullish SMT. Bearish and bullish SMT. So it's going to be very important to understand what the dollar is going to do, because it's going to fall in line at some point. And if the dollar keeps going higher, we'll continue to trust that, this may hold up. Something that has happened, we have gotten a price delivery through this daily fair value gap here. So we got to see what this next candle is going to do when it opens up. It's going to be inside this range when it opens up. So again, what is the most important highs and lows when we open up for the new week? Good morning, Harley. Appreciate you stopping by. But yeah, let me know in the chat, right? When we open up for a new week, what is the first initial most important high and low? And what are the most important other PD arrays? Just let me know in the chat real quick. That should definitely be a review. The last week's high and low. Yep. Yeah, Friday's high and low. And the last week's high and low. Those are two correct answers. And then, of course, like I said, when it comes to other PD arrays, it's not one in particular. It's just any that are in close proximity. Highs and lows are PD arrays. I just like to separate them, put them in their own categories. But yeah, so we have this high that was taken. We got the close proximity, new week opening gap. We have an order block here that it's still kind of trading inside of. It's technically respecting it, right? And, if the dollar does choose to go higher, that again, should have some weakness given. So it should be able to, result in this rejecting in here. We have an order block here. So that's a close proximity PD array that we're inside of. It's already traded into that. So if it's going to be bearish, right, if we do see that it's going to be bearish, it should respect this and aggressively look to get down below this. Once we get down below this candle here, you're set to target these lows. We have Friday. So why the hell was that labeled incorrectly? So we got Friday's high here. Got Friday's low. Okay. So yeah, those are our first and foremost liquidity pools, okay? And just like with the dollar, I said that if this gets taken out, right, and if it holds these levels and really pumps through that, that puts these equal highs up here in jeopardy, and this order block and the wick and the highs, right, the fair value gap, it puts all those in line to be potential targets, because this is going to be what I call a type 2 dealing range, okay? And it's no different for the indices, right? We have a high here, low, high, failure swing. So if it was to break this high, I'd be looking at this up here, okay? But if that doesn't happen, right, and we continue to respect these levels, we are technically not out of the woods yet for price to continue to go lower. It's kind of just accumulated and kind of ran up in here. It's left these lows down here. So, I think that we're just going to have to wait and see what this is going to do with this daily fair value gap, with this order block, with this new week opening gap. Because if it displaces through that, we're already above this wick here. So if it is going to try to get up there, it should not spend a lot more time in here. It's already done a lot of trading in there, right? And then, if DXY was to fall, right, we may be cracked in correlation, right? It may, hold on to this correlation issue. And in that regard, when it comes to DXY being cracked in correlation, we would just simply look at, what this is doing, what gold and silver are doing, what the currencies are doing, and then try to wait and see if things get back in line. And we got no problem with that, but it's just lower probability when those conditions are present. We prefer to see things symmetrical, because like ICT says, that's the first rule of high probability. It's market symmetry when it comes to risk on, risk off. So yeah, when we open up, we're going to be inside this. So my first, objective to look at and watch is going to be the high up here, because we're closer to that. I want to see, is it going to run up beyond that? So something I do I did just observe right there. Actually, I have SMT here. So yeah, that observation, that being in play, if this results in this candle being violated, that'll be our order flow confirmed. That'll be our daily time frame. Order flow confirmed, change in state of delivery. Otherwise, it may just continue to hang around. And if we respect these levels, we may start to turn that off, right? We got an order block here, got a down candle here, we got this down candle. 50% of that's being closed above. That's generally a good sign for a level to hold. Is there SMT? Yeah, there was SMT down there too. So SMT at these lows, with the NASDAQ being the weaker of the three. Let's see, was it just NASDAQ? No, it was the S&P as well, with the Dow leading as a strength holder. Okay, the Dow, right, we have this fair value gap. If it's going to go higher, I'm going to look for things to trust it. It's going to have to get above that. Once it gets above that, we just look for a simple retracement back into that fair value gap. It's also an inversion too. Can actually encapsulate that whole area. If it gets up above that, then a retracement into it should be expected to hold, and then we got trend line liquidity up here. Assuming that happens. If it doesn't happen and we stay below this, we have an order block here, right? We have an up candle in here. I actually have one here too. I think I'd use that one. So if it was to get back down below that on a closing basis, that works similar to this one here. And then, of course, that'd be off the heels of SMT, off the heels of this larger breaker from the daily chart. Just continuing to respect that lower portion. But this is where I would be fully confident that we're going to target these lows. So it may take a little while. I may have to wait a little bit to really want to get behind something. Whoops. But that's where my conviction is at. Unless it breaks, back up through this. If we get up above here, again, it's going to target the high up here. You can also kind of see what I mentioned about that type of dealing range I just talked about. We have a low, high, failure swing. So if it gets above that, again, it's going to target this, and that'll be a mitigation block. But we also have this smaller fractal of this exact potential failure swing type of dealing range. We have a high here. We have a low, high, failure swing. So if we really get above this high, right, this may be an early sign that it's trying to target this high up here. So in order for me to fully confirm that, though, I want to see how we treat this fair value gap. If it trades into this very slightly and then just immediately starts to rapidly chase this high, I will be looking to target the high up here. It may be a little bit more high resistance because it is a stop run. It's not a failure swing up there. Kind of is here, but we already have a stop run there. We are also inside of this range, right? So I have more conviction for now. If the dollar keeps going higher, that this should be able to hold in this order block, and this should be the line in the sand, 50% of that. But this is definitely not something you want to put to the side and not consider, because this may eventually prove to us that it was the early sign that it was going to target this high. And again, we could still get there and find a setup before it gets there. Just given where price is at, how consolidated it is, how, correlation's not necessarily the cleanest. We're going towards the end of the month as well. Given all those factors, I'm going to be more demanding. I want price to do what I want it to do. And if it doesn't, right, and I can't have enough to trust, then I have no problem sitting back and waiting. But I have more conviction so far because nothing's changed in terms of structural integrity. Nothing's changed for bearishness to be given up. We're seeing early signs that it may, right? But I need a little bit more out of the price delivery to really get behind, any type of change to the buy side. Okay, but keep this in mind. Hopefully that makes sense. And I think that's about it. I think we'll leave it there. But before we go, again, don't forget to like the video, subscribe to the channel if you get value. It helps me and the channel grow, helps me impact others, just as some of you guys may have been impacted so far. But yeah, if you have any last minute questions, we could use like the last 10 minutes to address those. No question is stupid or too basic, but I'm here for it. All right. So yeah, would you guys have any other questions? Let me know if you have any questions. If not, you could just throw one in the chat or just a no. And then we can leave it here. Yeah, hopefully everything's made sense. I think we got through this in a pretty decent time, 2 hours. It's the normal time. So yeah, just let me know real quick. All right. Oh, you're welcome. You're welcome, George. So yeah. If you guys don't got any other questions, I guess we'll leave it here. If any of you guys hopped on late, we've already went through so much, so I encourage you to rewatch the video. There's a lot to take away from these calls. I mean, it proves itself that it's worth your time. Okay, so see, Mike said reviewing your AMD vids, and so I got one question. AMD, you're talking about the private community one, or the Power 3 bootcamp? Okay, Harley, I appreciate you for hopping on, brother, as always. I know you do. Okay. All right, yeah, let me know, Mike, what the question is. Yeah, look, you notice the Power 3, February, bearish Power 3. We're towards the end of the month, and what is it doing? It's capping the monthly range. Set the low here, that's the wick. Set the high up here, that's the high of the wick. All this from here, the open, to this high, that's our current monthly candle. Okay, so weekly open when price manipulates below, best buys are below, so it's going to be a wick. Hey, Mike, the gears are turning, bro. Yes, it's executing. If it's a bullish Power 3 from a weekly perspective, you're looking to execute somewhere close to the low, preferably inside the wick of that bullish candle. So discount wick is manipulation. Yes, on every candle that's bullish, no matter what time frame, it could be classified with the statement you just said relative to that candle's range. If it's a 15-minute, if it's a 1 hour, if it's a weekly, daily, quarterly, right? That statement's true for every Power 3, not just the weekly. Of course, the weekly has its special place. So does the daily inside the analysis. But yeah, that statement is absolutely on point, 100%. That's what we're aiming for. That's why we want to buy below the open price for the daily candle if we're bullish. Same thing with the weekly if we're a swing trader, or if we're just trying to position for the weekly range expansion and be a part of it, and map out the different AMD phases. All right. So yeah, you're on point, Mike. So yeah, if you guys don't have any more questions, I will let you guys get back to your weekend. I gotta be out of here pretty soon. Gotta go help my friend real quick. Only for the next couple weeks, and then we can push this out a little bit more, so you guys don't have to be up with me so early. Unless you guys like the super early calls, it's totally up to you. It's early for me. It's like what, 7 a.m. right? But yeah, you guys will just have to let me know. Otherwise, we'll go back to the regular schedule when I can, which basically would begin right now. Yeah, I like getting up early. But yeah, so with that being said, if you guys got no more questions, I missed the beginning. Oh, no worries. No worries, Tony. You got this, bro. You can go back real quick. All right, perfect. Well, yeah, so again, thank you guys for hopping on. Don't forget to like the video. If you know any traders that you think can use a community like this, or if you know anyone that can add value that, also may enjoy this, invite them. I don't care how much experience they have. They could be brand new, just learned about trading. We'll be able to guide them and make sure that they're, saved from a, new trader perspective, so they don't fall into a lot of the things that I'm sure all of us have fell into because of how social media is. If people just want to learn, maybe be entertained here and there. I mean, Price puts on a show itself. It's the most entertaining thing I've ever done. Literally predicting the future, and you can make money from it. I mean, really? Pushing buttons? I think that's entertaining. You don't got to have a bunch of bells and whistles, honestly. But yeah, if you guys have no more questions, and if you guys may have joined late, I do encourage you to watch the beginning of the video. We talked about so much stuff, like always. Keep me updated with your guys' journey. I'm always open to listening and, helping y'all through whatever it is you need to get help through. Again, I do have a private group. If you guys did want to work with me closer on a one-on-one basis, the enrollment or the openings for the one-on-one element open up in March on the 16th for the second quarter. Every quarter it's opened up. You can always join the private group and you get to be first in line for that. But I can only do so much because there's so many people, and I have such little time. I already do 3 one-on-ones a day pretty much. So see, it's a lot, but hey, I'm here for it. I really want to see you succeed. So I want to give you as much as I can, and that's how it's going to be. Otherwise, I'm not going to run that type of service. I may not do it forever because it's a lot of work. It's a lot. It really is a lot. But I'm here for it. So it's not going to stop anytime soon until I'm satisfied with how many people I've been able to help. Who knows how long that's going to take. But it won't be forever. I'll probably have my community forever. But in terms of one-on-one, it's a lot. But I like the outcome. I like to see someone that doesn't know what's happening all of a sudden be clear on what it is that they're trying to do. So I find a lot of enjoyment from it. And again, it's one of those things that has made trading bigger than myself. So it's something I value greatly, and the fact that you guys give me your trust when you could be anywhere else. That says a lot. And, I hope you guys know I really appreciate it. Even if you guys are just here on YouTube, you guys could be anywhere else, but you're here on the weekend shows that you really want to make this happen. And you stick with me for 2 hours every weekend, so yeah. With that being said, hopefully you guys got value. Let me know if you guys have any questions throughout the day. I may be free a little bit later, just kind of depends on how things go. With the whole project that me and my friend are doing. But yeah, I'll let you guys know. Those of you in my private group. Those of you here on YouTube, we'll be live again on Tuesday, as always. What does the news look like this week? It's something we didn't even look at, huh? So yeah, we got a very, very light week, it seems. There's still news. Just shouldn't be as chaotic. PPI is going to be fun, probably. The FOMC meeting. This is not necessarily a heavy-hitting meeting unless it's economic. Yeah, okay, we got economic outlook and monetary policy. That's going to be pretty dynamic. So, damn it, it starts at 5. All right, so we're going to have to be up. Well, I'm already up at 3 a.m. So, hours before. So I guess we'll see what happens. Those of you in my private group will be up. We may hop on. I may send the link out a little bit earlier than normal. Just so we can get on and talk about it before this happens. I don't think anything too spectacular is going to take place. We still have Power 3 that we got to think of. Pre-market open might be pretty dynamic, though. So we'll see. And then we got President Trump speaking on Tuesday. So it's most likely going to be about tariffs. So you guys know how the tariffs affect the market. It's pretty intense, right? Which I never experienced until last year. But hey, still predictable. Still predictable because price is price. These are just excuses to make manipulation happen. So yeah. So is there anything I'm forgetting? No. So with that being said, God bless you guys. Hopefully you have a good rest of your Sunday. Let me know if you need anything, and I'll catch you guys on the next.